Hello and welcome everybody to SF Live. My name is Kai Hoffman. I'm the @JR Mining Guy on Twitter and the CEO of the Soar Financial Group. Really appreciate you joining us here for this. I hope interesting conversation. Well, actually, I know it's going to be an interesting conversation. I hope you find it interesting because we're joined by John Forwood. He's the CIO of Lowell Resource Fund out in Australia. He's down in Melbourne and he's traveling the globe right now because he's in North America. But I'm bringing him on to get a new perspective on sort of where we're at in the space, mining space that is, because he's in Australia. We often talk here on SF Live with North American guests. So it's time to break out of that echo chamber and see what is happening down under and see if the investment themes or theses are a bit different. So really looking forward to that. And we had him on about a year and 15 months ago. So let's see what has changed and bring him on in just 1 second. But before I bring my guest on, follow us on YouTube, follow us on Twitter, hit that like and subscribe button, and leave a comment or leave a like. I know roughly 80% of you are not subscribed to the channel. So if you want to do me a favor, hit that subscribe button. We really appreciate it. So one last thing before I switch over, join us in Frankfurt in person. Deutsche Goldmesse is happening November 18th and 19th. We have fantastic companies signed up, 35 of them, 6 amazing keynotes. We have the CDF Fund Awards happening as well. They'll give out an award to the best exploration story within their investment portfolio. Usually a pretty sought after event, lots of eyeballs on it. So make sure to join us in person and mingle with the CEOs. Thank you so much. Thanks for indulging me here. And now, John, thanks for indulging me as well. Thanks for joining us.
Thanks very much for having me on again. It's great to be chatting with you once again. I think we spoke a bit over a year ago. So yeah, there's been a lot happening since then.
Yeah, I was joking. I said, let's start with a question that sort of, what happened in the last 15 months? But I think that'll take 2 hours to sort of recap. But it's great to have you back on. You're a specialized resource fund fund out of Australia, and you're actually in Beaver Creek right now in North America, which is Beaver Creek is the home of, in my opinion, probably the most important conference in junior mining. It brings a lot of investors and companies together. I think it's over 200 companies as well. So I think massive. What brings you out? What's your reason of motivation?
Look, I'd like to find out what's happening. You talk about the echo chamber. We're in our own little echo chamber in Australia, and I want to find out what's a bit more about what's been happening in North America in particular. Look, I have a perception that valuations are even more beaten up on the Canadian markets than they are in Australia, and that if it's correct, could represent an opportunity for us. But I really want to find out, what's happening and sit down with a whole bunch of companies and feel their pulse.
Yeah, absolutely. I think that's been interesting. I hope you didn't just schedule meetings with ASX listed companies that are also making their way up there sometimes. So,
sure. Yeah. No. Look, I've definitely got to focus on the TSXV guys.
Fantastic. Any metals focus while we're at it? Any stage of development focus that you're looking for?
Look, we're always, we like to take the extra risk. We like to look at guys with the discovery potential. That's where the excitement and really big upside can be. And look, we've got we always hold a fair bit of gold in terms of companies that we're invested in. But we really like like the rest of the world, we really like the copper thematic, and I'm hoping to catch up with a few copper guys while I'm here in Colorado.
There should be a few. I've looked at the list, so you should have plenty to talk about there. And while we're at it, have you had a chance to check out any of the mining history around Beaver Creek? There was so much history. I hope you didn't just fly in and fly out again, or will fly out again.
Sure. Look, I got here a few days early, and I've been doing a few. I love hiking. And I've been doing a few hikes, and the weather's been absolutely superb. And on a lot of those hikes, you come across old mines. And some of these mines are, they're back from the 1880s or whatever. And they were quite substantial. But it sort of just brought home to me that it would be, even if there was ore left in those old deposits, it would be almost impossible to go back and redevelop them today. And that, it's just a fact of life. And I think it's one of the factors in terms of what we're seeing in terms of underinvestment, long-term underinvestment in the industry, and also difficulty in accessing resources. So, we see that squeeze developing further and further. And that's that's one of the factors. Not being able to get access to metal or resources in the ground.
Yeah, no, let's table that discussion for a second, but I want to come back to that because I think it's one of the key drivers, and especially like in copper, you mentioned that one of the focus areas there. But let's talk a bit real quick about sort of what's happening in the news in Australia and what is sort of dictating your investment thesis right now. I'll give ours away real quick. It's the Fed and the US dollar here in Europe and North America, and of course, energy prices, more so in Europe than in North America. What's dictating headlines down under right now?
Look, I think there's been quite a bit of M&A activity in the headlines in Australia. You've seen, well, not necessarily in Australia, but you've seen Rio Tinto making a play for Turquoise Hill in Mongolia. You've seen BHP, excuse me, making a play for South Australian copper miner Oz Minerals.
So John, like, remind me if I'm or correct me if I'm wrong, but the offer for Oz Minerals by BHP has been rejected. I don't think BHP came back with a revised offer, or have they?
Look, I think BHP regards its offer as good, and Oz are saying no, it's not nowhere near good enough. So they're in a bit of a stalemate. It may not be over, but we'll wait and see.
Now, what else is happening in the M&A scene? I hear a billionaire investor, Twiggy or Andrew Forrest, jumped into the market as well with an offer, or not an offer, but an investment into Greatland Gold. What do you think his motivation is there?
Yeah, look, I mean, that's Greatland have 30% of the Havieron discovery, which Newcrest has the other 70%, and they're putting the decline down into that as we speak. That's mainly a gold project. I think it's got some 5 million ounces of gold and about 100,000 tons of copper. But that will go through the nearby mill at Telfer, which is a very hungry mill that Newcrest own. So it is interesting to see Wyloo, which is controlled by Andrew Forrest, put in several $100 million into Greatland Gold. It'll definitely help Greatland keep up the running in the development of the Havieron project. But yeah, they'll still be the junior partner. So it's an interesting play, and interesting to see what might happen there. Yeah, watch this space.
Yeah, definitely. Well, valuations, at least in North America, I have to admit, actually, ASX is not my playground. It's more of a time zone thing for me, because I feel like when I wake up in the morning that I've missed most of the news, and the market's about to close again in Australia when I wake up. But like, what does it look like valuation wise down there? What's the mood like? It's been in comparison absolutely dire and beaten up in North America over the summer in mining. What does it look like down under?
Look, we feel like we're pretty beaten up. So interesting, look at the ASX gold index. It's trading probably 40% below its long-term average when you do a ratio to the Aussie dollar gold price. So certainly, the gold sector has been beaten up. Everyone is down, from the bigger guys like Northern Star to the Tiddler IPOs, with $5 or $10 million market cap. So yeah, but I'm interested to find out whether those sort of valuations are matched by what's been happening on the TSX, or is or the TSXV is that even more beaten up, and are there other sectors, metal sectors, which are more affected? So yeah, look, we had, as when we spoke last year, I think we had we're in the middle of a IPO frenzy on the ASX with the junior miners. There was some over 100 last year IPOs, and for the last probably 6 months there's been almost zero, but we are starting to see some IPO activity come back.
Interesting. Like, we don't have that at all in North America in our little echo chamber. I think there's been two. One was Ivanhoe Electric, and the other one was Bravo Mining, that I can recall, that were proper IPOs. Sure, there's always RTOs and some project transactions and things, but if you were to look at the pure definition of IPO, I think we had two. So very, very, very different. I've been speaking to a lot of macro commentators lately, and it seems like there's a common scapegoat is the Fed and the U.S. dollar. Who are blaming who are the Aussies blaming for the lack of performance in the mining sector?
Oh, look, we can blame our own Reserve Bank, which has been hiking interest rates as well. But look, I think globally, commodities are priced in US dollar terms. US dollars hitting 20+ year highs, and that's obviously dampening commodity prices. But if you look at commodity prices in Aussie dollar terms, so we are sitting around 2,500 Australian dollars an ounce of gold. And that's been actually quite a price with quite a lot of longevity, that $2,500 an ounce. I think, and this is probably not unique to Australia either, but there has been margin compression due to cost escalation and inflation. So I think a lot of gold miners have reported recently in Australia, and certainly their operating costs have crept up. So that's compressed their margins. So while the Aussie dollar gold price hasn't fallen, their cost base has increased. So that's definitely a bit of a factor. Another sort of micro factor or factor within that is the lack of people. That's a COVID issue. But Australia's unemployment rate is 3.5%, which is basically full employment, and you're seeing costs for skilled people like geologists and mining engineers go through the roof. So yeah, that's all that goes into the pot to put pressure on equity prices.
Like I was in Karratha in 2011, I think 2011, 2012 during the iron ore boom days, and I remember labor costs were insane. Like unskilled laborers were being paid 120, 150,000 Aussie dollars just to paint a wall or something like that per year. Like that was just insane. Do you see a return to that as well because of that shortage? Like, do you see the insanity, or the commodity prices holding everything in check for now?
Look, I think there is some huge pressure on wages in the mining sector at the moment in Australia. Interestingly though, the other things like pressure on assay laboratory turnaround times and availability of drill rigs has definitely eased off. I think that's since we saw the peak in the market back in April. There's been quite a lot of belt tightening done by junior explorers. And for example, companies which might have had 2 or 3 rigs running have scaled back to maybe one rig, just a typical example. And turnaround times in the labs, they were blowing out to 12 to 14 weeks for your average gold assay. I'm hearing that a lot of guys are now getting turnaround in the 3 to 4 week range, which is returning to a much more normal level.
That's fast. 3 to 4 weeks is rapid fast, in my opinion. So
Yeah,
even in North America, it depends a bit on where you're at. But if you're like in the Golden Triangle and it gets busy up there, you're waiting 2 to 3 months still. Like that hasn't changed too
wow.
much. It's also
Okay.
due because of the activity, but with the financing decline in the junior mining sector, I think that'll slow down definitely next year. So I'm pretty sure of that because it's been really dire up here in North America. Um, John, how has your investment focus changed since we last spoke? So it's been 12, 15 months now. A lot of macro events have happened since we've spoken. Have you shifted focus a little bit? Are you looking more at battery materials? Are you playing any trends right now?
Yeah, look, I think we've had a fantastic run in some of our battery mineral investments, and we have taken profits in those. So we are looking to recycle some of those profits back into battery metals. We also do oil and gas, and we've been looking to increase our exposure to that. So in particular, Australian East Coast gas market is something that is very connected to the international gas market, and everyone knows how that's been playing out and skyrocketing. So we've been increasing our exposure to Australian East Coast gas. Not so much producers, but guys who have gas in the ground and looking to test and expand those resources. And I think, like the rest of the world, we are looking for increased copper exposure.
Yeah, I was going to ask you, what do you mean by battery metals? Like, what do you include in that? Because I think everybody has a slightly different definition. So, and you mentioned copper at the end. Is that a battery metal for you?
Look, it definitely is. Well, look, I shouldn't say it's a battery metal, but it's the massive driver is the electrification and decarbonisation thematic. So look, you could put it in that basket. We generally don't. But in terms of our battery metals, we have had some fantastic exposure to lithium, which while everything else has been in the commodity markets has fallen, the lithium price really has stayed at fantastic levels, and I think the lithium thematic is still very strong, particularly in Australia. If you're an explorer who can announce you've got a pegmatite, found a pegmatite with some spodumene crystals in it, then your share price will still do extremely well. Other, we would put nickel, I guess, as a more potential battery metal. And one thing we have been looking at a bit more closely is manganese, because manganese does potentially have a increasing role to play in increasing energy density in drifting on other metals in EV batteries.
Yeah, no, fantastic. Question now, like a bit of a cheeky one. So, the battery metals or the energy transition, does it include silver for you? Because I see silver only has a 1% exposure. So I have to ask, why so little exposure to silver? And yeah, no, just curious, actually.
Yeah, look, I think that's one thing that we don't get a lot of exposure to in Australia on the ASX, is silver plays. In Canada and Toronto, there are a huge number more silver players than we have in Australia. For example, Mexico's one of the leading silver producers in the world, and I think we are invested in the only Australian company which is currently active in Mexico. So, and they're a silver player, and that's probably where our 1% comes from.
Oh, interesting. Interesting. Yeah, that's good point, because you don't hear a lot of silver projects about silver projects in Australia. I haven't, at least, though. Just different geology. Interesting. And it's usually more north-south. Also in North America, you mostly go down to Mexico and then South America as well to find those. I have to ask now, it's like you're in Beaver Creek. Like, what's the ultimate mission? Do you have cash to deploy right now, or is it more of an intelligence quest to find more information about what is going on in the sector?
Look, definitely both, Kai. We're looking for new investments, good opportunities, but trying to get an idea of the lay of the land. We can invest on the TSX. Well, we've got no constraints on which markets we can invest in, so long as we focus on resources. So very keen to hopefully find some great opportunities in the North American markets.
Fantastic. You sound quite hopeful. I'm pretty sure you'll find great opportunities, but you sound hopeful that those investments will pay off as well, meaning that the market will have to turn around a bit. And like, let's get our glass balls out here a little bit and start speculating. But A, when do you see that happening? B, like, what do you think will be, sort of the trend change, like, or what will start a trend change in our sector? What do you think?
Look, I'm very much an optimist, and I think the turnaround could happen quite quickly, and maybe we are seeing the some incipient signs of that already as North America starts to come back from its summer holidays. The US dollar override, US interest rates will be a big driver on what happens there. I think with interest rates rising, that has had a negative impact on the more speculative end of the market. But if the market can see that interest rates aren't going to go to 12% or something, then that will give the market a bit more heart to look at the non-revenue producing end of the sector again. Look, I think, as I always say, gold price is obviously very important. It's a US dollar gold price that drives the junior end of the sector, even in Australia. But it's not so much the absolute level of the gold price; it's the direction of the gold price. So if you can see a few weeks of positive movements in gold price, that will definitely help sentiment. And then silver, that's even more leveraged. The gold price goes up 0.5%. The silver price goes up for 3 or 4%. So that could take off. If we do see gold price starting to improve, silver price could move with it.
Absolutely. And maybe last question as well of our conversation here. How much of your fund is in cash right now? And do you have a plan to go all in at some point?
Look, we typically hold between 5 and 10% cash. We've just paid a distribution, which is about a 7% distribution. So we're down to around, I think, 5 or 6% cash at the moment. But we like to stay fairly fully invested to give our unit holders, what their exposure to what they want, which is to the resources market.
Absolutely, because inflation destroys your cash anyway. So you're losing that.
Yep.
Fantastic, John. What a fantastic conversation. I really appreciate you joining us from Beaver Creek here. Thanks for making the time on your trip. Much appreciated. Thanks for giving us some perspective of what is happening in Australia, sort of what the mood and the markets are like as well. As I said before, it's always good to break out of your own echo chamber and see what is happening elsewhere in the world. One of the reasons I love to travel, by the way. So thanks so much. Have fun with your meetings. I forgot to ask, how many do you have scheduled?
Look, I haven't counted them, but I think there's 30 or 40.
Yeah,
So,
that's okay.
enough. Yeah.
Yeah, I've been there, done that. So absolutely, it's usually fantastic. So the networking is insane there as well. So enjoy yourself, have a great time. I hope you learn a lot and come back with some fantastic investment ideas there as well. And all the best to you. Thank you so much for joining us, John.
Kai, thank you very much for having me.
Fantastic. Everybody else, thank you so much for tuning in. We were joined by the fantastic John Forwood. He's the CIO of Lowell Resource Fund out of Australia. He's based in Melbourne generally, but he's in the US right now. He's visiting the Beaver Creek Precious Metals Conference or Summit, and he's looking to deploy some capital. I think that's a positive sign. I think positive mood might take us to the year end. We'll see how it goes. As we're recording this, silver is up roughly 3.5%. I'll take it, and we'll go with that. And if you like the conversation, make sure to hit the subscribe and like button as well. Only 80% of you, or actually 80% of you, are not subscribed to this channel who are watching. Let's change it. And I really appreciate you for joining us. Thanks for your time, and we'll be back with more very soon.